Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, November 2nd, Election Day 2010. All right, folks, markets are higher today. Nice gap up this morning. Markets gapping up about, give or take, about 0.5% to 0.75%. The markets have just gone sideways since that gap up. As we called yesterday for a flat to positive day, we got it. As I call today, a flat to positive day, and it looks like that's exactly what we're going to get as well. So again, understanding the nature of the market is so key in making money or making the right financial decision. Because essentially what you have is, really for the last 2 months, the markets have rallied dramatically higher, and then over the last couple weeks, we know they're not going to drop the markets into the elections or into the QE2 announcement tomorrow, so you just have to be in that neutral to positive bias. Now, starting tomorrow at 2:15 p.m. Eastern Time, that's when it all goes off the table. The markets could have a dramatic move higher or a dramatic move lower. I do ultimately think there will be a move in one direction or the other starting tomorrow. Either we'll have a top in the market in the short term for a decent little pullback, or the markets will break higher. It's going to be one or the other. Be ready for that action tomorrow. And again, we're putting out plays currently, and I have even entered some plays today that are personally leading me towards a development of a position for the next major move in the markets. And again, you can get all that info by joining the research center at InTheMoneyStocks.com. Now, again, as I described, the market gapped up today. Take a look at that. Now, what's the reasoning behind the gap up? How is the market gapping up today? I mean, is it just purely the elections? Is it purely, QE2 tomorrow? Actually, ultimately, it just comes down to the dollar. The U.S. dollar getting pounded again, gapping lower today once the market opened. Take a look at this, folks. Here's your dollar chart, UUP, major gap down. This is where we closed yesterday. Right here, this is where you open today. Since then, it's basically gone sideways, but nonetheless, notice how a sideways dollar, you've gone up above this line and back down below this line. So again, net, the dollar is basically flat on the gap down. So again, dollar lower, but gone sideways since the open of the markets. If you take a look at the markets here, that's exactly what we're seeing. We're seeing the same thing. Markets, again, just going sideways. So, again, pay attention. Understand how the dollar influences the markets. When the dollar is weaker, the markets will be higher. If the dollar goes sideways, the markets go sideways. All right, and that's exactly what we're seeing today. So, again, nice little bit of a gap up today, but since then, the markets have gone just sideways on this pattern. Into the afternoon session, this is exactly what I expect. Honestly, folks, I don't expect anything different today. I think the markets are just going to hold pat. We'll probably end somewhere in this general range where we are currently trading today. All right, let's go over a couple other key charts after just touching base. Now, remember, tomorrow, 2:15 p.m. Eastern Time, the Federal Reserve will announce how much QE2 quantitative easing they will do. Now, remember, quantitative easing is just a term that the markets are being given by the Fed to disguise the fact that the Fed is now the buyer of last resort of U.S. debt. Countries like China are buying less and less U.S. debt. Therefore, that difference, what the U.S. government needs to run this country and not have it go into a major recession or depression again, the difference between that and what China and these other countries are supplying the slack has to be picked up by the Federal Reserve. Again, it's a scary situation because after the Fed, there's no one left to do that. And again, how long can the Fed do that, especially if China and the rest of these countries pull away more and more, which ultimately they will. Now, again, I think the Fed thinks that ultimately the market could recover or the economy will recover, and then obviously tax revenue will pick up and the rest of these things will help. But I don't honestly think that will be the case in the long term over the next multiple year period. All right, again, Goldman Sachs trading up 91 cents. However, JP Morgan is getting hit today. JP Morgan, an investigation underway into some issues that they had, much like Goldman Sachs did a while ago, going back to the April high. Interesting how that high in April was marked by Goldman Sachs investigation. Now JP Morgan being investigated much the same way. You have to wonder if this is somewhat of a little bit of a pivot top based on those two comparisons drawn together. Bank of America continues to be weak today, although it is bouncing a little bit off the low. But you can see that chart today intraday. Notice the gap higher and the reversal to the downside, now a little bit of a bounce. And again, think about this, folks. The foreclosure mess is so far from over in this country that literally it will take years and years to go. And again, it's just a bigger and bigger mess as more and more people fall behind on their mortgage payments. Foreclosures have to be done. You have to clear this out of the way before you can have any sort of growth back in the housing market or price increases in the housing market, regardless of the influence of the Federal Reserve. And again, Bank of America, JP Morgan, Wells Fargo, main players in that foreclosure mess, and they'll have to work through that and take multiple losses on those facts. All right, going to ExxonMobil. Makes sense that Exxon's having a big day today, up over $1 today. Look at that chart. It's a beautiful chart today on Exxon. Why would Exxon be stronger today? Because the dollar is substantially weaker. Remember, dollar weak, commodities higher. Commodities react inverse to the dollar, just like the market does. If the commodities are higher, like oil is higher, don't you think that Exxon, which obviously does oil, would be higher as well? And that's the case. So again, you see on a weak dollar, Exxon having a good day. Chevron is having a good bounce back day as well, up 73 cents after a pretty ugly reversal yesterday. Other stocks in play today. Apple Computer is having a good solid day, up about $4.50. That's a very nice move. Apple, if you go to the daily chart, has been weaker of late. You can see it made a little pivot top here really right before earnings, gap down, retraced back up, and has come down to the 20 moving average. It bounced beautifully off the 20 moving average. I would say the next time down it probably breaks through, but right now they could lift this thing back to a double top. Again, a lot will depend on what the QE2 is tomorrow on the announcement. Remember, later this week, folks, you do get the jobs numbers on Friday. We will be doing a No Hype Live broadcast of that number to our members of the Research Center, and again, you can join that by getting involved and buying the Research Center monthly subscription, $49.99 a month. And again, you'll be able to see the live charts, and we'll be discussing live as those numbers come out Friday morning at 8:30 a.m. Eastern Time. All right, Apple Computer, as I mentioned, good day there. Amazon, which was weak the last few days, notice how it hits the 20 moving average right here. 20 moving average tag, and look at the bounce today. And again, one of these times, each time you hit or pierce the 20 moving average, which was right here again, and then yesterday, this 20 moving average becomes weaker and weaker. That tells us, again, eventually, if you come down and hit it too many times, most likely you will break, and it could collapse down just a little bit more. All right, little other stocks on watch right now. One of the favorite stocks that I'm keeping a very close eye, I told the chat about this morning, was this play right here, CDTID. Again, you can see the symbol right here, CDTID right there. But the key is here again, folks, the big run up basically from about $5 all the way to about $45 in about a week. It has retraced back down. It does start to look interesting. I'm keeping my eye somewhere in this $12 range. It looks attractive. It could come down to this 20 moving average in the short run before a little bit of a pop, but most likely you will get some buyers in there, and it could start to run. When this thing runs, you could easily expect a $5 bounce on it, but it's an extremely high-risk play. 55,000 shares traded today. Not a lot of volume in there, so you have to be extra careful. But again, just giving you guys an idea of a couple of different stocks I am watching here on a generally slow day in the markets. In addition, LIVE, Live, right here, live deal, had another same type of move up, went from basically $4 to 22 in one day. It's now down right around this 20 moving average. Good retrace back down. I'm keeping a close eye on this LIVE, and again, symbol right here if you can't listen or hear what I'm saying right there as well. And again, just keep an eye on it because, again, retraces like this oftentimes will have a big solid bounce in them. Not to say it's going to go back up here, but you get a retrace. It's all about retraces and Fibonacci stuff and like that in the markets. And again, keep an eye on them as they could be possible players. All right, Baidu's up at $1.50, Google's up $1.75. Really not big moves on those stocks. Really, again, J.P. Morgan, Wells Fargo are weaker along with Bank of America. Financials definitely seem weaker, even though Goldman is positive. Everything else seems to be pretty strong today. I am noticing Intel after a big day yesterday is down. Let's take a look at INTC. Intel, again, notice Intel, guys, right into the 200 moving average on the daily. That's your target in the short run for Intel. And again, it should be reaching a little bit of a pivot top in the short run anyways. Could pull back. It is pulling back already today. All right, that's about it for today, guys. Just a reminder, more plays going into the next few days. We're going to get volatility in this market. Volatility is going to return in a major way, I think, starting tomorrow afternoon. So what you need to do is be ready for that. Join the Research Center. I already put out some alerts on the Pro Trader watch list and on the Hot Charts and Alerts. More will be coming out. Hidden Gems up 36% at the high today from the alert for November so far. We're only in the first few days of November, basically a week since that Hidden Gem debuted, and it is, again, reaching a 36% gain, and again, the target should continue to be higher and higher. Good stuff, folks. We'll continue to watch and see how it plays out. Take care. Have a great rest of the day and afternoon.